Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Bob, tell me what's going on with your rentals.
Yeah, it's pretty interesting times, as you know. It was interesting because I was up to 32 or 33 doors. And me and my business partner kind of looked at our whole portfolio, and because of appreciation, we're like, you know what? We decided to sell our entire portfolio to take the cash. And then, at the end of the year, we looked at each other. We said, I think we made a little bit of a mistake. We probably should have held them. But hindsight's 2020. So right now, what we're actually doing is we're starting to buy and hold now. We're back up to 15 doors. So that's what our focus is on this year. We do a lot of different stuff, from wholesaling to buying and holding, a little bit of fix and flip. But our main focus for 2025 is going to start adding to our portfolio again.
By deciding to sell and then buy rental properties right back, Bob ended up paying a lot of taxes that he really could have avoided if he never sold or if he did a 1031 exchange. So on the show today, we're going to try to understand why Bob sold and how he changed his mind so quickly. We'll also talk about what he's buying now as he builds out his new portfolio. Joining us on the show today from West Hartford, Connecticut is Bob Lachance. We'll take a quick break to thank our sponsors. We'll come right back and we'll talk to Bob. For decades, real estate has been a cornerstone of the world's largest portfolios, but it's also historically been complex, time-consuming, and expensive. But imagine if real estate investing was suddenly easy. All the benefits of owning real, tangible assets without all the complexity and expense. That's the power of the Fundrise Flagship Real Estate Fund. Now you can invest in a $1.1 billion portfolio of real estate starting with as little as $10. 4,700 single-family rental homes spread across the booming Sunbelt. 3.3 million square feet of highly sought-after industrial facilities thanks to the e-commerce wave. The Flagship Fund is one of the largest of its kind, well-diversified, and managed by a team of professionals. And now it's available to you. Visit fundrise.com/RIP to explore the fund's full portfolio, check out historical returns, and start investing in just minutes. Carefully consider the investment objectives, risks, charges, and expenses of the Fundrise Flagship Fund before investing. This and other information can be found in the fund's perspective at fundrise.com/flagship. This is a paid advertisement. It's a lot of work to find a really good rental property, and when you actually find that property, you want to make sure you're working with a lender that can get that loan closed. The lender that I recommend is Chaley Ridge from Ridge Lending Group. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of loan programs, and she can find something customized to you for your situation. If you want to find out more or you're ready to get started today, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056. Investing in rental properties can be complicated, but it doesn't have to be. My friends at MidSouth HomeBuyers sell completely rehab turnkey properties in both Memphis and Little Rock, and they've been doing it for 23 years. All their properties come totally rehab. They put on a new roof, new kitchen, new bath, new plumbing, new electric. Everything is brand new. They also have a tenant that's moved in before you close, so you get cash flow on day one. MidSouth HomeBuyers also continues to manage the property for you after closing. It couldn't be easier. Everything is 100% done for you. All their properties also come with a couple of guarantees. They have a 1-year total maintenance warranty and a lifetime occupancy guarantee. Personally, I just closed on my 5th property with MidSouth HomeBuyers, and I couldn't be happier. If you want to talk to a happy customer, reach out to me. I'm happy to answer any questions, or you can check them out at midsouthhomebuyers.com. Bob, so walk me through the thought process. Why did you initially decide to sell?
You know what? I have a couple other businesses as well. I have a real estate investment company. I also have a virtual staffing company that services a bunch of different industries, real estate investing being one of them, medical being another. But the reason why we actually looked to sell is we said, okay, what does it look like to have a pile of cash sitting on the sidelines just in case down the road there's a great opportunity that comes up to where you could buy a bigger portfolio? So that was our main kind of focus and why we actually did that. And then, like we talked about off this call, the property's appreciated greatly. And we said, you know what, let's take some chips off the table. Let's put some cash in the bank and let's reassess next year. So that's why now we started looking at all that. And now, we built our team up a little more here, and we decided to, hey, let's start adding more doors. So that's kind of the long and short of how we looked at that.
So the rentals weren't giving you any trouble. It doesn't sound like you were just getting tired of owning rentals. It was just you saw an opportunity to take a gain and you went for it.
It was solely appreciation. It was the gain of it. And this, owning real estate as well. I think for us, you definitely have to get your stuff in place, whether it's working with a fantastic property manager, but do your due diligence, right? If you're going to be managing themselves, that's one thing. But if you're working with property managers, make sure I'm talking to myself too. We all do our due diligence in interviewing the property managers as well. But we took chips off the table. That's the main reason.
And how long did you own the properties for?
Mainly probably about 3 years.
Okay.
And yep.
So with your property manager, so it was pretty hands off. It sounds like you had a property manager. Like, did you ever think like, we've made this appreciation, but let's just let it ride and see if prices continue to go up?
We did, but we always look at that. But I've also in the past, I've been doing this for 20-something years. I've also in the past got a little burnt before. You made the mistakes, kind of like when you invest in the stock market, right? Right now, the stock market is getting beat up pretty bad. And if you look at it, you say, hey, what if I sold 3 months ago? I would recapture. So it's kind of the same thinking. Again, I've been doing this for about a little over 20 years. So I've seen a lot of ups and downs. Yeah. It's just really a calculated decision. That's all it was.
And then as far as actually selling, did you have tenants in the property when you sold, or did you sell things as units turned over?
Some of them we did. Majority of them we actually, once they turned over, we decided to sell them. And this is why I love, for me personally, I know a lot of people like the bigger apartment complexes, but for me and my business partner, we look at it. Single family houses are fantastic because if you ever decide that you want to sell, it's so much easier to sell one house at a time rather than selling a bigger building because your buyer's pool is way bigger. So again, that's what we did. It was majority of them are turnover because that's when we maximize our profits.
All right. So you didn't sell them as a package. You sold them off one at a time.
Correct. Yep.
Was that like hard to do, like to sell that many houses?
Not at all. So most of our houses were in Connecticut. In Connecticut, we're in an interesting market. We've appreciated a lot, and there's so many more buyers than there are sellers. So there's a lack of inventory in Connecticut. And I think a lot of different areas in the United States are like that. So for us, we're fortunate to be in a good market where the average days on the market are not too high. So it's easier to liquidate those types of properties.
Okay. Yeah, that makes sense. So then when you sold everything and you see that money in your bank, you've made a good profit. How long did it take before you realized that you shouldn't have sold or you got the itch to get back into it again?
Yeah, it was probably about 6 months. And like I said, we do real estate investing as well. So we do a lot of different marketing channels. And for us, we're looking at it saying, okay, we need somewhere to park our cash as well. Because I know a lot of individuals that listen to this podcast that you're on have side business or have main businesses and that reinvest in real estate. So I look at me as the same as that, those individuals, because, you probably have doctors, dentists, other lawyers that listen to this podcast or other individuals in other fields. So I have my virtual assistant company. I also have my real estate investing, wholesaling company where we need to put that cash somewhere. So that's one of the things. 6 months ago, we decided we're like, we have to start buying real estate, obviously because of tax purposes, et cetera. And that was the main reason we looked at that. We're like, all right, we need to put our cash somewhere, and there's nowhere better place to put our cash is in real estate.
Yeah, I mean, that's a good point about the tax thing. So when you sold and you got a big gain, like, did you get a huge tax bill?
Yeah. I mean, it's one of those ones where it's fortunate but unfortunate. Hopefully now, obviously, the depreciation, all that stuff comes back to where it used to be back in the day. But yes, we got hit with a pretty good sizable tax bill. But again, we knew what we were looking at. We wanted to put that cash right away a little bit to then have bigger opportunities. Maybe just like you said, maybe build or buy a bigger portfolio of someone that's going to be willing to sell in the near future. So again, that was some of our mindsets. But now, obviously, 6 months ago, we realized, all right, now we gotta get back into it.
And then what did you buy then? So as you're building out your new portfolio, did you change your strategy at all, or the types of properties that you're buying?
So in Connecticut, it's pretty interesting. You have to look at where you buy, because obviously you obviously need the cash flow. We actually bought 15 door, or not 15. We have about 13 doors in Jacksonville. We're working with a fantastic property manager down there that I've known probably for probably about 12, 13 years. We made a mistake, working with a different company rather than theirs at the beginning. And then we switched to them, and it's been working fantastic. So we decided to go into a market that is the barrier of entry is a lot lower than it is in Connecticut.
So, all right, so the initial properties were in Connecticut, and now You're buying in Florida.
Mm-hmm. Yeah, we have a couple here in Connecticut here and there because our marketing is driving in some very good leads that if we buy it, it makes sense. But mostly in Jacksonville right now.
How did you figure out where to invest? Like what area of Jacksonville was good, or, what area you want to stay away from?
So I'm part of a bunch of masterminds, and my business partner does handle a lot of that side of it. And we know a lot of lenders down there. We know that, they're rebuilding this city. They're building a new stadium in the next few years. So all the area near the stadium is going to be going up in value and up in price. So, but still the initial investment to get into rentals is still there in Jacksonville.
Now, what about the redeploying the cash? So did you have, like, with all the profit you made, was that enough for 20% down payments on every property you're buying, or are you buying them with cash? Like, how are you doing this?
So we're doing both. We also work with a lot of investors because I'm part of different masterminds all over the country. And there are a lot of wholesalers in Jacksonville area. So what we try to do is buy something, obviously at more of a discount, and then put a little money into it. So we'll buy it in cash, put a little more money into it, and then refinance. It's almost like the Burr method. So money up front and then refi it out.
All right. So everything you're buying is a fixer upper?
Not everything. So at that point, we do some marketing ourselves down there. So, and I live in Connecticut. We still do some marketing down there. So we'll still try to get it at a little bit of a discount. I'll give you an example. So we are, I think probably today or Monday, we have a package of 3 of our houses down in Jacksonville that we're refinancing, and we have to come out of pocket with about 10 grand.
Okay.
Which is not too bad. That's almost $3,000 a house. Not too bad.
So have you found that it makes a difference at all being local versus being being out of state? Like, did you have more comfort knowing that you were local to your properties with your first portfolio?
It is better to see, feel, and touch on one hand. But on the other hand, it all depends if your numbers work, if you have a good ground team, if you have a good property manager. It all depends on who on your team that you feel is good. I mean, in any business, it's really you're only as good as your team.
Yeah. And tell us about your portfolio right now. Like, are you still buying single families?
We are. Yep. We definitely are. So we're marketing all the time. We get deals sent to us on a daily basis that we need to look at and review. So we are currently buying.
And what are the neighborhoods like?
They're about C neighborhoods.
Okay. And is that what you were buying in Connecticut?
We were buying that same thing in Connecticut.
Same
Yeah,
thing.
because you start looking in Connecticut, it's pretty interesting. Properties have appreciated so high that it's tough to make it into a rental property. So you have to, and this is what I'm seeing. I know some people may disagree with me, but where I live in Connecticut up here, it's tougher to find those deals. So you got to go into really like the lower BC neighborhoods for it to make sense.
Now, what about like in Florida? I always hear that the market in Florida isn't doing so well, that with all the insurance costs, with all the hurricanes they've had in the last couple of years. Has that made it difficult, or is that an opportunity?
I think it's an opportunity, but where we purchase, again, it's not right on the coast. So on the coast, you're going to get, you are going to fall into that challenge, if you will, with higher insurance costs. I know the Airbnb market kind of, has to deal with that because a lot of those houses are right on the water. The properties that we have are interior, so we don't get hit that bad with the insurance challenges.
That's good. And even the cost, like it's not been prohibitive with the insurance rates.
Yep. It's all, I mean, and I listen to your podcast all the time. We have to always make sure that we run our numbers the right way to make sure it's a cash flow property.
How have things been working out with the new property manager?
It's been fantastic. And the reason why too, it's the communication line is open all the time. And every time we reach out to them, they're very, very, they respond to us very quickly. So it's been fantastic.
Maybe we could walk through one of the deals and talk about what you're buying. So maybe for your last property that you bought, can you tell me about it?
Sure. I mean, typically in Jacksonville, the majority of the properties are on slabs, or majority of them, they all are on slabs. So it's a lot different than up here in Connecticut where you're dealing with basements, etc. So, you're talking about, typically it's about 3-bed, 1-bath on a slab. Very easy. So we'll go with one on 59th Street in Jacksonville. So this is the one we bought for $92,000, put about $10,000 into it. And this one we already refied out. And it's worth about $169, the fair market value.
And what's
what's
it rented for?
Let me see here. I'm pulling it up right now. This one's $1,200.
$1,200. Okay. Wow. All right. So those are really good numbers. And you're getting good quality tenants.
We are. I mean, a couple of them, we had some turnover, which is fine. That's why we changed management companies. With our current management company right now, it's been phenomenal. They've been finding great tenants. So that's been awesome.
But you had a problem with your first company?
Yeah, that's they came as we found them actually ourselves, and it wasn't as a referral. I like actually getting more referrals, because if someone has already used that company, vetted them and worked with them, I'm huge on referrals. And I didn't know that company. We just kind of tested it, and we purchased on this will make sense. We purchased on what they charged us. And what I found in any type of business, and shame on me for this one, we went price shopping, if you will, and they were the cheapest, and they had come to find out they had the worst service. So I will not do that again.
Yeah,
the current one we have right now has been fantastic.
That's good. Yeah, you really, really get what you pay for.
Exactly. So again, I mean, just like yourself, I've been in business for a long time, and sometimes we still make those mistakes, unfortunately.
It pains me that Bob had to pay the capital gains taxes on the properties in Connecticut when he could have easily done a 1031 exchange to buy down in Florida, but it sounds like he's doing all right and he's okay with paying the taxes. Well, as Bob mentioned earlier in the interview, he also runs a virtual assistant company. If you're looking for a virtual assistant for your business and you want to reach out to Bob, I've got his contact information on the website. You can find it at rentalincomepodcast.com/episode 517. I'd like to thank Chaley Ridge from Ridge Lending Group for sponsoring today's episode. If you're looking to buy a rental property, whether you're just getting started or you want to add to your portfolio, reach out to Chaley. She's got a ton of different loan programs, and she can find something that'll work for you. You can track her down at ridgelendinggroup.com, NMLS 42056. Thank you so much for checking out the podcast today. I'll be back with a new interview next Tuesday. My name is Dan Lane, and this has been the Rental Income Podcast.